So we're going to start taking a look at some stock recommendations now. We're going to go to tip ranks. It's been a while since I've used this, so let me pull up Apple to begin with to show you guys some of the things that are really good about this. So first things first, since you guys mentioned Apple, let's take a look at tip ranks. And the big thing that tip ranks has is they actually list all the analyst forecasts. So for example, we see Apple right here. I think you guys can see it on the far left. It's currently trading at $239. Now, of course, my eyes. Oh, you guys want dark mode or something? I think it's fine. I think it's completely fine. We have Apple is trading at $239. Basically the consensus price target amongst analysts, these are people on Wall Street, is an average of 245.06, meaning that it's about $6 higher. I am not recording this for YouTube. I am responding to your comments that you guys asked, but we're doing a sponsored portion about stocks. Now, Tesla I will talk about too, but let's look at Apple. Now, of course, Apple is a stock that I know very well. I do recall that Apple about a month ago was trading around 200 or maybe a little over 200. Or no, not 200. It was trading around like 227, 228, and now it's trading 239. So it has gone up a little bit in the last month. The consensus is around 245 amongst analysts. The highest price target currently 290. Lowest price target is $180. So we'll see that we have these analysts like Goldman Sachs. They list at 266. You have this guy Mark Newman at Bernstein. Success rate 63%. Average return 12%. And he has a price target of 290, 21% upside. This segment is not for the bright-minded only. We're gonna have fun building portfolios. And of course, like I've said before, I'm obviously not a financial analyst. But on the flip side, I will tell you guys that I have pretty soundly beaten the market in recent years. And I said years, not year, to be clear. Okay, so we have a bunch of recommendations here for Apple. I think if you're going to buy a stock like Apple, it has to be very much for the long term. I'm a little bit hesitant to necessarily buy it. On the other hand, I feel like the market these days, it keeps going up. I'm actually gonna give you guys my opinion. I don't like Apple. I'm gonna tell you guys that I think right now where the market is going, what people are interested in is all about AI. I think Apple has upside, but I would rather just own Apple through an index fund than own Apple. So even though Apple is the first suggestion on this list, I think Apple is a I'm just gonna put right here, we're gonna put NO. No, not exciting. Not excite. There we go. I think you guys see that. I think you guys see that or not? You guys see that, right? Not excite. So let's move on. Let's go to VTI. I believe VTI is actually an index. Okay. I do not have chat turned off. I see chat. We have VTI. Okay, so we have an overview. The analyst forecast. Again, this is an index. So I guess the 12-month forecast is 363. It's trading at 325. So more or less, move my cam so you can see the full list. Okay, I'll move my cam over here. Sorry, guys, I'll move my cam here. I'll move the logo as well, and we'll keep going. We have VTI, so upside, they're basically saying market can go up 11%. For today, I don't really want to talk about index funds very specifically, and the reason is because I will just show you guys. So somewhere, it's been a while since I've used. So let me go to portfolio. Okay. Let me show you I'm going to show you one portfolio. Now, these numbers I randomly just put 500. I put 500 shares of all of these. I am going to tell you guys that, like, full disclosure, I do actually hold all these ETFs in retirement accounts. The numbers are random because you just pick a number of shares. It's not correlated with anything. If people are really interested in indexes, you should just buy a little bit every single month, buy and hold forever, literally forever, unless you're past a certain age. So I don't really want to talk about index funds. This, by the way, when I say 850K, you'll notice that I just arbitrarily put 500 shares of every single one, just because it could have been one share, it could have been 5 shares, could have been any number. But I will say that, like, this actually is, like, literally in my retirement funds, I do hold all these ETFs. So if you're interested in ETFs, you can take a look at this. This is actually what I do hold. And that's that. But you will notice also that whenever I create this portfolio, I don't know, I want to say it was maybe a month ago, you'll notice that, like, the Qs are up 5%, for example. The Qs are up 5% in this period. And I didn't mean to click that. Qs are up 5% this period. You'll notice that XLV, this is the healthcare, it's up about 4.5. You'll notice that XLK, which is technology, is up 4.5. Surprising, by the way, considering the biggest holdings in XLK are Oracle and or not the biggest, but Oracle and Broadcom are two of the big holdings. So I'm surprised it's up less than QQQ. But this is basically just ETFs. I will tell you guys that, I just buy ETFs. I hold them forever, not worried whatsoever. I understand nothing, but I shall pretend to understand. Okay, I'll talk about this very briefly, and then we're just going to focus on stocks. So QQQ, very specifically, this is the Nasdaq. So when you turn on your TV, and you'll hear that the Nasdaq is up, or the Nasdaq is up, or you'll hear this S&P is up, or the Dow is up. These are basically the indexes, meaning the QQQ comprises all of the stocks. So for example, you'll see here that in the Qs you have Nvidia, Microsoft, Apple, Broadcom, Amazon, Meta, Tesla, Google. All the companies that make up the index are included. So if you turn on your TV and you see how the Nasdaq is doing, the performance of the QQQ is going to completely mirror what you see in the what you see on TV. So like the performance of this will be the exact same as the index. So just to give you guys an idea, or for example, if we go back, I think the one I have is IVV. There are other ones like there's VOO, which is the same thing. This, of course, is the S&P. So when you go to the holdings, this index is comprised of the top 500 holdings, or not top 500, the 500 holdings that are part of the S&P 500. So basically, the reason that people do indexing is because, for example, if you look at this chart or you look at the stocks, you'll notice that today Apple's up 1%. Amazon's up 1.5%. But if you individually own, for example, Nvidia, you're like, oh man, what's going on? The Nasdaq is up on the day, but I'm down 1.5% because Nvidia is down 1.4%. So if people really want to be boring and they want to you want what the market return, what you would do is you would buy an index fund and you get the complete return. And even though, for example, Nvidia is down 1.4%, I believe that today the Nasdaq is close to flat. So if you only own Nvidia, you're underperforming the market by 1.4% versus the S&P, which is actually down 0.07%. So this is just this. I just do want to get this out of the way because I don't really want to look at indexes today. But if, for example, I would say of all the, I've said this on my stream many times. If there's one thing that I would recommend that people do, if you've got a little bit of capital and you're not sure what to do and everything else like that, what I would say is, let's just say, for example, you have $100 a month that you can invest in the market. What you can do, especially in 2025, is you don't have to buy full shares. You can buy dollar amounts. So let's just say, for example, you want to invest $100 a month. What I would recommend you do is just put $20 in every single one of these for the next month. And then you get to November, set aside $100, buy $20 in each one of them, and keep doing that. Keep doing that forever, basically. The street's saying you're washed. The street? What is the streets? I don't know what the streets is. Maybe I'm missing something when we're talking about. I'm not a financial analyst, so I don't know why the street would be talking about me. But anyway, yeah. So this is all about. I've got to show them that we're showing. This is for tip ranks, you guys. So I'm basically just showing you guys. These are the index funds. Now let's get back to the fun stuff. So this is ETF. Let me see. Are there any other ETFs in here? There are. Doesn't look like it. Okay, let's start with Fig. Now, Fig is something I'm familiar with, of course. This is Figma. This is a stock that IPO'd about, I want to say like a couple of weeks ago, 3 to 4 weeks ago. It's a stock that I had a short position for a short while. It is trading currently at $53. I believe that Figma was around, I think, $80 or $85 before earnings. Maybe I'm a little bit wrong. Let's look at the overview and take a look at the chart. Take a look at the year-to-date chart. Figma was $122 when it IPO'd. It came down into the 79, 80, 88 to 79. Then they had bad earnings somewhere right here, I think, which is when it tanked from 68 down to 54. They're trading at $53. I believe they IPO'd at 37, so they're up a little bit. The problem with them that I remember looking at was that, let me see, how do I find the advanced stuff? Give me a second, you guys. I want to see show more. Yeah, so the big issue with Figma very specifically is we're going to talk about something else called the price to earnings ratio, the PE. It's trading at 282. This is a very high price to earnings. This is projecting future growth. Assuming this is correct, and I have no reason to think it's not correct, 282 is very high. So for example, if you look at the indexes, and I'll just show the indexes one more time. Let's just say IVV very quickly. Or this is an ETF, but the same thing. Currently, if we where's the PE? Does the PE show? It doesn't. Let's go to SPY. This should show PE. 1 second. It does not show the PE, unless I'm missing something. Why doesn't it show the PE? Basically, if you look at the index as a whole, generally historically the price to earnings ratio of all the stocks in the market is about 17 to 18. I think currently it's trading about 23. So we go back to Figma here. If we go to the overview with the price earnings at 282, there's huge growth projected in the future. It's not up that much off the IPO. When I combine the very high price to earnings with the fact that it's well off the high from when it started and it IPO'd at 37, it's at 53. I think it's a pass. I think it's a pass also because the market is at all-time highs. Everything is sky high, and I'm very worried that it's not. I'm worried that if there's a crash, it's gonna go down by 50% plus. Now, if somebody really likes a stock, what I would probably recommend is however much money you have, is I would split it in half. So I'd buy something like I would buy something like, let's just say you have $2,000 to invest. I would do something like buy $1,000, and if it goes down 20 or 25%, buy another $1,000. The average cost a little bit lower. But in general, if you're looking at a position like this, I'd be worried with the market at all-time highs. Normal PEs, it depends on the industry. So if you look at like financial, so I'll pull up JPM just to give you like the classic example of a financial one. The PE here of JP Morgan is 15.7. On the other hand, if you show the hottest stock that anyone's talking about, which is Palantir, the price to earnings is 569.7 because they're projecting massive growth out into the future. So it depends on the industry. Tech is always going to have higher PEs than, like, say, finance, which is rock solid. So it all depends. Now, I don't know if there's a way to compare. If there's a way to compare companies in the same industry, maybe there is. Let me see. I don't want to look at financials right now. Although I do want to talk about some general stuff, which is that, for example, you can look at this really cool thing, which is which are actually similar stocks. Here we go. So Palantir. Okay, so you'll see like Palantir, the PE ratio is 569. You have Palo Alto Networks, which is 122. Then you have CrowdStrike here with a 721 PE. I can see you guys who are writing. So it's all over the place. All over the place. Oracle with a 67 PE. Oracle up tremendously. So it's all over the place. But we are looking at the stocks. Figma, I would say, is either buy half or none. Okay, now we're going to talk about ISRG, another stock that's Intuitive Surgical, another stock that I'm familiar with, not super closely, currently trading at 433. Now, it's trading at 433. You'll notice that the consensus amongst analysts is 600. Now, that is substantially higher. That is that's a lot higher. That's 170. That's $170 higher. So that's basically. I mean, my math isn't great, but that's more than 40% or 40% projected upside. Or 38.81, I should say, to be very clear cut. From where it's at, let's take a look at the overview. Let's take a look at the 5-year chart. Now, the 5-year high is 591, so it's peeled off the 5-year high. That high was in February 2025, and now it's 433, which means something happened. Let's take a look at this. One of the other great things on tip ranks: bulls say, bears say. What happened? Why did it fall so far? There are investor concerns about ISRG's procedure growth outlook due to increased procedure penetration, which has affected its stock multiple, also known as the PE. Decelerating greenfield placements could be a function of more penetrated market, difficult capex environment, weighing on systems and procedures. Why did it fall? Why did it fall from 600 to 433? I just want to see if they list it here. In their news. I just want to see. There's got to be a reason it collapsed so far, because 591 to 433 is a big drop. Closer look. Okay, I see all these systems. Maybe someone in chat knows. Does someone in chat know why it tanked so far? Because someone recommended it. I don't see anything in the recent news, but it really tanked. Like if we zoom in. Okay, let's see. It was 544. Okay, so right here. 544. It was 591 sooner. Okay, so 557 in June. It dipped to 509. Then it came back up to 544. And since July, it's had a massive downtrend. Tariffs? I don't know. I don't know about tariffs. But it worries me because this is a big drop. Okay, so you're saying it dropped because of what? Because of RFK? It dropped alongside all of healthcare? if there wasn't something fundamentally substantial in terms of decline, other than it's like people are worried about the future of healthcare and what's happening at HHS and everything else with RFK, then I'm actually of the opinion beta is 1.19p, 62.8. 52 week is 425, 616. Now, if we're looking at bottom fishing, this is very close to the 52 week low. Okay, I'm going to add this. I'm going to create a new portfolio and I'm going to add this. Okay, here we go. Let's create a new portfolio. Add new portfolio. Okay. Stream portfolio. I think I'm going to add this, and I'm going to work on the assumption. Oh wait, no, I have to type in. Okay, it's for typing in. Okay, there we go. ISRG. Let's create the portfolio. It's not enough. Okay, there we go. Wait, here we go. Okay, so we're gonna add ISRG. I'm gonna assume that this portfolio we're doing on stream, I'm gonna actually keep it real by putting numbers of shares. I would say, since it's so close to a low, I would put it at, this is basically gonna be a stream portfolio. Number of shares, so it's 433. We're gonna live in the real world. Let's say, I think 20 shares. Let's say 25 shares. Okay. Because I think I'm gonna pretend this is a real portfolio. We're in the real world. It's not gonna be something silly. And I'm gonna work on the assumption that we have $100,000 to play with. So we're gonna go on 100,000. I should probably lower it. It should be about 15, because it should not be a super high percentage of the portfolio. So let's start with ISRG. So now let's go back to our sheet. ISRG, let's say buy. There we go. Next one is Nvidia. What is this? Is this this is something Nvidia, right? Wait, what's this? Oh no, I think this is just a mistake. It's just a mistake. It's just a mistake. They meant Nvidia. Okay. Yeah, they meant Nvidia. There's no such stock. Okay, so Nvidia, of course, the classic stock that everybody loves. No, you cannot. This is for research, you guys. You cannot. They're not a brokerage. They're not a brokerage, so you cannot buy and sell through them. Just to be clear. Okay, so Nvidia's, what's it? 175. Of course, it's trading. I think what's the high? The high is right around 180. I think that was around earnings when they dipped initially. So. Okay, so I don't need the 5 year. Let's take a look at 1 year. Of course, Nvidia, big run from 100. I think April 20th, this might have been the DeepSeek. I think this is DeepSeek. It's come all the way back to 175. I mean, I'm just going to tell you guys right off. I don't like Nvidia. It's a very mature company. I believe that, like with Apple, it can go up. It can definitely go up and outperform perhaps, but I feel like you're better off owning it through an ETF than like just straight up owning it. I don't see like huge outperformance. I think that if I look at it as a broad spectrum, I don't know if there are going to be any other AI stocks on this list. I assume there are. I think there are going to be stocks that are cheaper that have more upside potentially than Nvidia. If the market goes up, Nvidia goes up. Is it going to go up 1,000% or like whatever insane amount it went up in recently in the last couple of years? I don't see it happening. So I'm going to say no to Nvidia. I know people aren't going to like that, but I think I'm going to say no. Okay, QQQ obviously is an index, so we're going to put no. Okay, what do we have? We have Illuminati, right? We have Illuminati, of course, which is currently 112. This stock, I believe, is much lower. I feel like when I looked at it in the old days, it was north of 200. Let me take a look at the 5 year. Yeah, of course. It was actually $500. Illumina was $500 in 2021. So it's way off the high. So that's the 5 year chart, minus 66%. Not particularly attractive. The 1 year chart, you can see up here, minus 22%. Also not a great performance. Literally the best company right now. It's been the best performing company. Yes. I didn't say that. I mean, if you bought Nvidia before the boom, of course it's going to go, it's gonna, you've done insanely well. You've outperformed the market tremendously. Same with Palantir, obviously. So Illumina, I don't know a whole lot about 52-week range. It's in the middle of a range. The PE is 12, very cheap PE. Earnings are soon. Let's see what they say. It's a company I've heard of, but I don't know a whole lot about them. Expected Novus SEQ transition. I don't know what that means. significantly lower than current stock price. Underperformed. Illumina repurchased 380 million. Okay, the buyback revenue was the high end of the guide. Clinical adoption now accounts for 53%. Okay, price target lowered from 124. Let's take a look at the forecasts. Forecast is actually not very good. 12% upside on the forecast. Decent. Let's see, is there an AI prediction for this one? I don't see an AI. I don't think is there an AI prediction? Okay, let's take a look at the AI analysis. Rating 66, price target 109. Analysts don't see upside. Analysts do not see upside on the stock. Year-over-year revenue declining. Clinical market strength. Don't know a whole lot about them. This segment's going to be like another 10 to 15 minutes. Not super long. I'm just going to say no to them because I don't know enough. The analyst targets aren't high. They're way off the hot. They're not doing well in a market which is hot. We already covered Nvidia. Okay, BRKB. This one I don't even need to look at. Wait, BRK. There we go. BRK.B. This is of course Berkshire Hathaway B shares because nobody here has enough money to buy an A share. I actually have thought about buying an A share, by the way, for anyone who's wondering, but it's too expensive. BRKB 538 price target 489. If you're looking for something that's going to be stable, I think it's reasonable. Is it gonna really outperform? Very hard to judge. Warren is stepping down, I believe, at the end of the year if he hasn't already stepped down. Why do I care about other analysts if I'm a better analyst? I'm trying to show you guys the reasons to use the site and all the great tools they have. I mean, Warren, I think Berkshire is a very solid stock. I mean, I think it can go up, it can go down very minimally. If the market goes up, it's going to go up. I think actually Berkshire, if you want to buy it, it's probably a good buy if you think the market's going to crash. They have so much they have so many defensive holdings and they've got so much cash on hand right now. I feel like I don't know if it's over $400 billion, but Warren's sitting on something like $400 billion in cash sitting in treasuries. They've got so much cash they can deploy. I think it's a pretty solid, stable stock. I think if I go to portfolio, I'm going to add it, but it's going to be about the same amount. Okay, so BRK.B. Let's there we go. We'll add it. What do we say? Like, let's say we'll do the same thing. 15 shares. Same thing. No, that's probably too overweight. That's too overweight. Let's do it basically equal amount. Let's do 13 shares. There we go. Okay. I think it's defensive though. I think it's good to have something defensive in case the market collapses. Because if the market collapses, you know they're just going to take that $400 billion and just buy everything on the cheap, like they did in 2008. Like Goldman Sachs, Bank of America. Actually, yeah, I think they did Goldman Sachs and Bank of America, both of those when everything collapsed. So I think that's a very solid one for defensive. Apple, we already covered. VNDA, I don't think I even know what that is. Someone finally found a stock that I've never even heard of. Okay, Vanda, $20. Let's take a look at the overview. Market cap 263 million. So it's a very small. This is like a small cap company, not a mega cap or a large cap. So it's got 263 million market cap. PE doesn't show. I'm going to assume this is a new stock or not. No, the stock has been around. So the 5-year chart. Poor performance, minus 56%. Very, very bad. Okay, I know nothing. Oh, drug approval. Oh, wait, is this biotech? Okay, is this biotech? Let's take a look at the analyst forecast. Okay, let's see. Let me see if I can pull up this article. Okay, promising pipeline. Okay, this is let's see. Okay, promising pipeline. What do they have? They've got a designation for the. Okay, so they've got a drug. It's an inhibitor. Polycythemia vera. I don't actually know what that is. Okay, mRNA. So it's an mRNA treatment, which are safer, more effective treatments. This is definitely a no. But if you guys put a gun to my head and force me to play it, I'll tell you what I would do. If you put a gun to my head and force me to play it, it would be much smaller. So this is very clearly to me a complete gamble. This is basically based on like I don't know what phase what phases their drug trials are in. This is based on basically getting a drug through, phase 2, phase 3, PDUFA, getting pure approval and hoping that the stock goes up 500%. So if you put a gun to my head and you made me do it, here's what I would actually do. I would own it, but I would own it very thin. So this is the other thing to keep in mind as well, which is you have to understand how you play these things. So I'm going to add it, but it's going to be a very thin holding. I am going to buy I think 35 shares is about right. No, wait, sorry. I can't do math. I meant 350. Wrong one. There we go. So can't do math, as I said before. Let's go. Okay, there we go. So it's going to be a very thin holding for me. I'll scroll up so you guys see. So for example, you see here, I mean, it could go up 300%. It could go down, but that's why I'm going to keep this as a very light holding. It's like $1,500, and if it doubles or triples, great. If it doesn't, it doesn't. But I don't want this to be a big position, relatively speaking. So that'll be my fun one that I throw in there just because. Okay, now we get to Google. Now Google, of course, has been on fire. TSM, I own TSM. I own TSM from like 130 2 years ago. I'm gonna get called away at 250. But I'll talk about that afterwards. Now, Google, of course, insane. This is a stock that greatly pains me because I did own options in it very recently, which I took out for a small profit around like 210, 211, and it's gone up to 250. Went up 8% about a week ago when the whole antitrust thing was thrown out the window. And of course, there's AI stuff with Gemini, etc. So it's gone up a lot recently. It's gone from like 200 to 250 in the last, I want to say, 2 months, if I'm not mistaken. Exactly. It was actually even lower than that in June. It was like 170. But it's gone up tremendously. Now, the thing with Google is it doesn't get the love that a lot of other companies get. Anytime you see earnings, like it always trades at lower multiples. So like the PE is 25.6, massive market cap, $3 trillion, one of the, I think, third or fourth biggest company in the world. I think Google is a buy. I think Google is very clearly a buy. When I look at the performance, like it hasn't had as much of a run up. It doesn't get the same love as a lot of the other tech companies. I think it's very clearly a buy. So let's go to the portfolio. We will add it. I'm going to add it slightly heavier. I'm going to add let's see. Okay, it's 252. Which is, that's not let's go here. I think that's probably too much. Let's size it down. Somewhere around here. Yeah. I think it should be the biggest holding. So as you'll see from this holding, we have Google with 10K. Now we'll get back to the list. We have MP. MP, another stock that pains me tremendously because it's a stock that I looked at when it was like 29, I think. And the next day it went to like 33, and I was like, okay, it's up 10%. Like, screw this, I'm not getting in. And now it's trading at $66 because, of course, it's a rare earth mineral company. I think it's the only one that's completely based in the U.S., if I'm not mistaken. It is a stock that I really like overall. I don't even have to look at the analysis. Stock that I think has great potential. I think the more instability there is in the world, the better it's going to do. I believe that one of the Australian magnates owns a lot of it as well. I think Gina Reinhardt, like the richest person in Australia, I think she has a big percentage. Let me take a look at the who's holding it. I think she owns a big chunk, like maybe like 5% of the company, if I'm not mistaken. Maybe it doesn't show. Actually, wait, that's here we go. Doesn't show here. These are hedge funds versus individuals, but I really like MP a lot. I think it's a good play in the current environment we're in. So I'm going to add it too. Let's add it to the portfolio. 12-month forecast is AI. So there are multiple. So if I go to AI stock analysis, this is the price target. So the AI says $71. The analyst forecast of $77.91 is analysts on Wall Street. So you'll see here, Carlos de Alba with Morgan Stanley has a price target of 65. Who else is there? There's this guy. This guy is not doing well. This is OpenAI? Wait a second. Is this a real person or is this AI? Wait. This is not a real person, I think. Is this a real person or not? It says OpenAI. I'm confused what that means. I can't tell if this is a real person or if this is like the AI with a picture. But regardless, he's done very poorly. His average return is minus 20%. And he is... I don't know. Gavin is getting wrecked though. He's performing very poorly, minus 20%. That's not what you want. So I'm just gonna add it to the portfolio. I think it's a pretty decent one. Same thing. I'm going to add it thin, not thin, but let's add it. Number of shares. Okay. I don't know. 100 seems decent, right? It seems decent. We look at the balancing here. Pretty balanced. Pretty balanced. Okay, let's take a look. Okay, so we got through MP. I don't know what KDGI is. Apple, I don't know. BMNR, of course, is crypto. Of course, I've heard a lot about this. I haven't looked very closely. Everybody's trying to become a crypto treasury these days. I don't know exactly what they do. They're trading at 55. I mean, anything crypto, as I've said before, I'm not anything crypto. I feel like you're better off just owning it directly, in my opinion. Maybe that's just me being a boomer. But I'm not a huge fan of all of these. So I would say if you want to do crypto, just buy Ethereum or Bitcoin directly is my view. So let's keep going. ODS. We're almost at the end. Okay, ODS. I'll do like one more. Or ODS is not a stock. Okay, I guess it's not a stock. Okay, what do we have? Palantir, very hard to judge. If you were to buy Palantir, I'm not going to recommend. If you were to buy Palantir, probably what I would recommend is trading at 170, way above the 12-week forecast. Probably I would do buy rights. I mean, actually, I shouldn't even say that because I don't want to even mention options on here. But that's what I would do personally. Because I feel like the expectations are so incredibly high. The price to earnings ratio is so incredibly high. It is growing, but I mean, it's had such a massive rally. If we look at the 5-year chart, I mean, not even 5-year, you look at like the 3-year chart. I mean, it's up 2,000%. 2,000%, no joke. It's up 2,078% in 3 years. I mean, it's had such a massive run. Even the 1 year is like 370%. I mean, I don't know. Again, it's kind of like Nvidia. I feel like just buy tech, and if market goes up, it's going to go up. Plain and simple. So, okay, what else do we have? We'll take a look at a few more. I'll take a look at Amazon, Viking, and Tesla, I guess. Okay, let me see. Okay, we'll take a look at Amazon. Amazon, also a stock that, I mean, it's done well, but unlike Palantir, Nvidia hasn't gone through the roof. Obviously, it's a little bit different as a company. Let's see. So we look at the 1-year chart. It is near the high. It was 242 at the beginning of the year. We had, of course, the classic dip on the tariffs back to 230-ish. It's a good solid stock. 2.5 trillion market cap. P is 34. Again, nothing really special that I can say about it, but I would say that much like Google, it's a stock that I believe in very strongly. So I would add it. I would definitely own Amazon. Let's go to Amazon. Let's see. We will add, it's 235. We will add, I don't know, like 15 maybe. No, that's too little. Let's do 45. Let's do a little bit thinner. Let's do 40. How much do we have here? We've got 40K, so we've got 60K in cash. Chess is happening very soon, you guys. I'm just going to cover a few more. We'll cover some others maybe next week, actually. Let's go to VKTX. This is, of course, Viking Therapeutics. I've got nothing to say about about Viking. I mean, they're a stock. They're in my view, I would say it's gambling. They're either going to go up a lot or they're going to go down to, like, maybe not zero, but they're either going to go up a lot or they're going to go down a lot. I don't like it. I don't like it because it's an all or none situation. I don't really, that's I would say, in my opinion, not really investing. Okay, let's show, of course, the classic Tesla, which is currently trading at $417.82 after Elon bought another $1 billion yesterday. 12-month forecast, as you can see, is 310, 25% downside. This does not trade on fundamentals, as we all know. Of course, it's based on the future and AI, very specifically things like robo taxi and Tesla Optimus. I think it's called Optimus, the robot they want to have in homes. I don't know where it's going. I mean, again, full disclosure, I have very big positions in Tesla, so I'm not going to pretend that I'm not biased, and I do think Tesla is going to go up. Don't get me wrong. It's a stock, though, that, again, I feel like in general is going to be an all or none. It's going to be an all or none, and I feel like, I don't want to, like, I know this is not a real portfolio, but I don't want to have a portfolio where it's like zig up, zigzag, like up, down, down, down. So I mean, I do think it's a reasonable it is a reasonable company. I obviously have very large option position in Tesla, full disclosure. So on the call side, obviously. So I do believe in it, but I would say that I think, you know, here's what I'm gonna suggest. I do believe Tesla is going to be higher 1 year from now. So the way that I'm going to do this, since I'm trying not just to be very planned vanilla, I'm trying to show like money management as well, is I'm going to add it, but I'm going to do it small. So the way that you do this is like very specifically in my mind. If we look at $6,000 as being the baseline that we're buying, I'm going to keep it rather light. I think I'm going to buy 12 shares now. No, not 12 shares. Why? Oh, no. I meant, we're going to do 6 shares now, or we're going to do 7 shares now. And if the stock drops like 20 to 30%, which definitely could happen, then I'm going to double down to dollar cost average a little bit lower. But I'm going to keep this as a very thin position, very, very thin position. If it goes up, great. If it doesn't, you know, and it stays here, whatever. But basically, I don't want to have the full position, because if it goes down, and I believe it's going to go up in the long term, I don't want to be all in. You always need to have some cash available, which is why we're not going to fully do it. So that's Tesla. I'm going to show, I think, one more stock. I think the last stock I'm going to show is my beloved, another stock that I absolutely love, which of course is AppLovin. Now this is a stock currently trading at 601. Whoo, it's gone up. Very, very nice. It's currently trading at 601. Highest price target is 725. Average price target 550. Lowest target is 425. This is a stock, again, I am very biased as I have very serious long positions in this too, from in the 300s. I love AppLovin. The earnings have been great. The company is growing at a tremendous clip. This is a company that I think is actually going to be, I'm going to make a prediction. I think this is going to be a $1 trillion company at some point. I don't know when, but I think it will be. Let me just go to overview. Currently, its market cap is $203 billion. I don't know when it's going to get to 1 trillion, but I do believe that App is going to be a $1 trillion company. If you look at like the 3-year, you know, in 2022, when it IPO'd, it was $22. Now it's trading at 600 today, as you see, 601. It's probably my favorite stock overall that I like. So it is going to be a stock that I'm going to add to this as well. But again, it's a stock that is very high. It's a stock that's very volatile. If, like, I don't want to show options because that's outside the purview of what I want to do. But there's a lot of juice in it. So it is probably my favorite stock currently in the market. But again, when you're way up, it's very different. I mean, it's very different when you're up. So I'm going to add it to the portfolio. It's going to be the last stock that we cover for today. Let me add it. AppLovin. Let's add it here. It's a stock that, like I said, it's very volatile. It could drop. On the other hand, I do think that with AppLovin being included, actually, there's one more I'm going to show. One last one I'm going to add. With it being included in the S&P 500 as one of the 500 largest companies in, I believe, 2 weeks, it's being added on September 20, or not 2 weeks, in 1 week, September 22nd. I think it's going to continue to drift upwards. So this is one that I would say, let's see. I will add, I think, 12 shares. This is one that I actually believe in very firmly. Let's see. Let's add a bit more. So this, and there's, well, the one last one I'm going to show that I'm a big fan of course, it's another stock that's run a lot, is Robinhood. Great stock. It's trading at 117. Everybody knows what Robinhood is. They do ads on mobile games. Yes. Robinhood, of course, everyone is aware of. They are the platform of choice for trading for anybody who's under the age of 30. Everybody and their brother uses it. Their app is dominant. If I look at Fidelity or Schwab, it is not even comparable. I would also add as an anecdotal story, just very briefly. I saw Mr. Beast open Robinhood on his phone, and to me, I mean, not that Mr. Beast is necessarily the best anecdote or like a reason to do something, but to me, I feel like Mr. Beast sort of captures the essence of what kids understand or what kids like these days. And so I view that as sort of an affirmation of the fact that Robinhood, as more and more kids become adults, they're going to be using this app. If that childhood credit that Trump was trying to introduce for $1,000 for every new baby born becomes a thing, I think that's also going to be a very big long-term long-term tailwind for Robinhood. So I really do like Robinhood. I think it's a very, very good stock. I think that it's a stock that's going to continue to grow. So I do like it. I do think that it is very dependent on crypto and where the market goes. So it could have pullbacks, of course. But I really do like Robinhood. I feel like a stock that I think is going to continue to grow. Currently, let's take a look at the market cap. I think is 104 billion. If I compare it to Schwab, I believe Schwab's market cap is what? Market cap of Schwab is 165 billion. I mean, it has a lot of room to grow. I don't know if it's going to happen overnight. I mean, one funny thing, one last little bit that I'll say that's amazing is you have to tip your cap to Sam Bankman-Fried, because he actually bought multiple companies when they were very cheap, like Robinhood. I think he bought it when it was $8. If he had been able to hold on to those shares, he would have made a ton of money for FTX, just like Anthropic, where I think the stake that he bought in Anthropic would have been worth 14 billion today, and he bought it for like 1 billion. One little fun tidbit. But we're going to add Hood to the portfolio. So let's go to portfolio. I think Hood, though, again, it's one of those ones that I would love to buy cheaper. It's of course trading at all-time highs. Or wait, where did I go? So we're going to add Hood. It's going to be the final one. So I'm going to buy this a little bit thinner. How much do we have? We've only put in about half the money. I'm going to buy this. I'm going to buy a half size. So let's see if we buy, that's 50-ish. Maybe I'll go 55. So this is going to be it for right now. And so basically this is going to be the portfolio for the time being. We're going to have, you'll see the portfolio. We've got 59 invested, 41K in cash. Technically, since I'm trying to act like this is a real portfolio of 100,000, these are the positions. We've got ISRG, Berkshire B, VNDA, which is just, I mean, actually, no, do I really want to, does it even make sense to have this? Does it really make sense to have this here? Because it's an all or none. No, I think I'm gonna delete this. I don't want VNDA. I just, it's too stupid. So this is what we have. We have ISRG, Berkshire B, Google, MP, Amazon, Tesla, App, and Hood. Of course, a big tilt, as you can see, towards Google and Amazon. In this, they both are the largest positions. It should show the percentage, I think. How do I see percentage of holding value? Can I see? I want to see. I can't see a percentage, but whatever. It's still good. But anyway, this is what we have. So this is going to be the portfolio for the time being. I will check it more stock. We'll look at more stocks and go from there. But anyway, that's going to do it. The segment ran a little bit long, but this of course is this is tip ranks. They have a lot of good stuff. They have these. They have all that analyst stuff. You can get the analyst consensus. They have the AI as well, and they also show like insiders. So for example, if I show Amazon. One last thing I want to mention, because I didn't get to it, is you can also see what the insiders are doing. So if you go to like insider trading, you'll notice that you see all this stuff on Amazon, what the insiders are doing. Like, for example, you'll see that Jeffrey Bezos, the CEO, or the executive chairman, I should say, sold 23 billion, or no, 23 million. That's very thin for him. No, sorry, Jeffrey Bezos on 2 months ago sold $954 million of $954 million. He sold $1.5 billion. He sold another $1.5 billion. Yeah, Jeffrey Bezos sold a lot of shares in my gosh, 736 million, 665 million, 1.5 billion, 1.5 billion, 954 million, 166 million. It must be good to be rich. It must be good to be rich. That's all I'm gonna say. This Jeffrey Bezos guy, he's got a lot of money. He's got a lot of money. But anyway, so there are a lot of good tools on tip ranks. That's going to be our stream portfolio. We'll take a look at it periodically. I'm simulating as though I were creating a portfolio. I will say I do have positions in a lot of these stocks, though, whether it's in stocks or in options. So anyway, you guys, that's going to do it. And that's that. So I hope you guys enjoy the sponsored portion. Of course, we have Exclam tip ranks. There you go. You get the all the information, and that's going to do it with our segments, or our sponsored segment of the stream.